So today is Thursday, May 12th, 2022. Don't know when you're watching this, but the news came in for April and new listings went down 2%. Under contract homes went down 1% versus last year in April. What do you think about it, Chris?
I think it's more of a macro trend that we're seeing. Obviously, there's a lot of geopolitical issues going on in Europe, rising interest rates. It's all affecting the stock market as well. And so this kind of macro feeling that the economy isn't in as great of a shape as some consumers might like it to be is definitely having an impact on the broader real estate market as a whole.
And I think it's important to say, like in April and May, we expect an uptick in the market as a whole. So even a plateauing or a slight decrease is very interesting.
Absolutely. I mean, I think that people will start to be able to stomach everything going on in the economy, and especially with the nice weather, people are going to start hitting the streets. But at the same time, who knows what might happen with the broader economy.
Stock market's down 20%.
20-40%. Purchasing power has gone down. If your
interest rates have gone up.
Yeah, that's definitely lending a hand to it becoming less of a seller's market and potentially more of a buyer's market. But at the same time, as we're seeing kind of this plateau of inventory where you would have expected it to go up, it might just end up balancing it out.
No doubt. So we're gonna change gears to a quick, too long didn't read, and we're gonna talk about this article called "The Fed Wants to Cool the U.S. Housing Market." And what I find interesting is, okay, we talk about these big inflationary trends. And what's interesting to us as real estate brokers is the Fed is saying that we are pointing at the housing market. And I'm curious to hear your take on this big governmental entity shining the spotlight at our industry.
So I mean, first off, the real estate industry is one of the biggest industries as a whole in the entire US economy. So when you get into this high inflationary environment, the Fed is going to raise interest rates to put squeezes on consumers. So their entire goal is to reduce inflation. And in order to do so, it's been done before, and the way it's been done is by raising interest rates as a whole.
What the Fed is trying to do is decrease demand. I want to actually put it in concrete terms for the three of you who are still watching. What economics tells us is that a home purchase, it's like a really big consumer spending event. You buy a house, you gotta get window treatments, furniture, all new stuff. You're hiring movers, you're hiring landscapers, etc. So this singular event of purchasing a home has this crazy trickle-down effect for demand of consumer products. They wanna bring demand down on all of that, and a key trigger is housing.
Yeah.
That was too long, didn't read. We kind of got in the weeds there, but I think there's some good nuggets. Again, this episode is sponsored by Scott Schneiderman of Guaranteed Rate. Thanks, Chris. See you next time.
Sounds good.